Okay, this is timing strategies for Monday, July the 7th. This is our client account update blog spot. It's not designed for the public to try to piggyback, or this is not a buy or sell recommendation. I'm going to start making that more and more stated on the openings. So again, this is for client use. If you happen to come across this and you're a member of the public, not a client, please feel free to give us a call or send us an email. But again, this is designed to help give value and communication to clients as far as what we're doing with our long and our long short accounts in Ridex. Bottom line, also our content got a little bit destroyed from June 11th up until July the 5th. We got a web tech that is doing some things. We're trying to make some improvements to the site, and we lost some data, so I'm going to do my best to repost those as best I can, but it's probably not going to be perfectly recreated. Well, let's get down to business. We were long as of the 27th, about 60%. When the market took out the low and closed below the low of the 27th for us, we reduced that long exposure down to about 25-30%. And then on Thursday, we flipped right back long again for a long exposure on Thursday, July the 3rd of about 60%. Originally, I was looking for this B2 level at about 123.50 to 120 on the S&P. 123.50 to 122 on the spiders, which would be about 12.20 on the S&P or 12.35 on the S&P. As a B2 point to get long of about 120%. That has been changed due to the nature and the price action of this market. I'm starting to see a lot of things that just really imply that this market cannot get going to the upside. There's very little elasticity. What I want to point out is if you take a look at Barron's over the weekend, they put a big snarling grizzly bear on the cover of their magazine. Hey man, don't use that contrarian news cover garbage as the best buy indicator. Barron's is hip to knowing that when they put a bear or a lot of pictures of bears on their news cover, that it used to be a really good contrarian indicator. They figured that out a long time ago, so they do that on purpose, basically trying to game a contrary bet to their own contrary indicator. That said, take a look at the Barron's for this week, July the 3rd. And that commenting is that there's enough negative sentiment and there's enough price depression that we could see, and we're looking for in the account, a snapback of about 5%, which should take us up to about the 1,300 minimum, about 130 on the spiders, up to potentially 133.5 if possible. To reload our shorts. We are long 20% Dow, 20% NASDAQ, and 20% S&P, while we are short 20% in the Russell. I mean, not 20% in the Russell, we're short 35% in the Russell. And that's worked out pretty good, because if you look at the Qs for the NASDAQ proxy, that was actually up. We did okay on that one, being long 20%. The S&P, using the spiders, we're not sweating too much of a drawdown, having only 20% exposure to that by about 0.5%, a little more than 0.5%, but that's only 0.2 of that 0.5%. And if you look at the diamonds or the Dow, no, that's not what we want. If you look at the diamonds, 20% long there isn't sweating it too bad either, down about 0.5%, 1/3%. We are also long, regrettably, the financials. If you want to use the XLF as a proxy for that, 20%, that's not helping. But again, the short in the Russell, using the IWM as a proxy, that's kind of hedging that position. So we're kind of not a perfect hedge, but we're not getting the kind of full drawdown that you'd expect if it was just straight long. And then we also are still long our gold account, using the GDX as a proxy. I'm starting to get a little hesitant on that GDX as well. I'm starting to get real hesitant on everything in this market, because the elasticity factor being as negative as the sentiment that we've seen here, we should have gotten a pop today, a lot strong by the latest today. I'm thinking now, that's my thinking, and I've been wrong many times before, and I'm sure I'll be wrong again many times in the future. But that pop I was looking for today, and it's the one that we got towards the end of the day, I was looking for it to take us a little higher than what we did, and at least close, hopefully, which we did not get, a close back above the lows on the 1st of July, and hopefully back a close sooner or later back above the highs of the 2nd of July. That's the Maginot line. If we can get back above this level on any of these, that'll give us a little short-term breathing room. But longer term, again, I'm still bearish as it gets. What I'd really love to see is a one-day bar that does something like this, like I'm showing you here, where one day you see the Dow, S&P, Dow up 400 or 500 points, and Goldilocks comes out, with, kisses and a confetti parade and the whole deal, because that will give us all the ammunition we need to dump that long leg, at least the bulk of it, and start looking to reload our shorts. But right now, too many cross currents to be as aggressive as I'd like to see, or that I was anticipating. Like I said, back at B2 of 120%, so effectively we're only long half that of about 60%. I hope everybody had a good 4th of July. We'll update these positions on a day-to-day basis as best we can. Again, this is our client blog update for our accounts, and if you have any questions, if you're non-client or especially clients, please give us a call or an email. Have a good night.